Hello everyone. Today I'm going to answer a question which I get asked all the time from new investors, and that is, which is better, active investing or passive investing? Let's discuss. First, let's break each of these down real quick. Passive investing, also called formula investing, typically involves saving regularly, for example, every month, into a broad market index fund or an ETF. This is what we call dollar cost averaging, which is a strategy that takes emotion out of the equation. You invest no matter what the market is doing. Now, on the flip side, we have active investing, in which you learn to evaluate and value businesses yourself. Under this strategy, you study companies, understand industries, and analyze financials before deciding where to put your money based on your own research and conviction. Now, let's tackle the question, which approach should you choose? Now, here's the truth. If you don't have the time, the patience, the resources, or the interest to study companies and understand financial statements, then passive investing is 100% the right approach for you. It's simple, effective, and over the long term, it gets the job done. But if you're someone who enjoys learning, are curious to learn how businesses work, and are willing to invest the time to understand financial statements and business valuation, and you have the emotional discipline to stay calm when markets fall, then active investing becomes a very real and very powerful wealth building tool. Now, let's be clear, both these strategies work, but the key question is, which strategy works best for you? Because the best strategy is the one you can stick with, not just for a few months, but for decades. Now, here's what I want to leave you with. If you're someone who's serious about active investing, meaning you're someone who's willing to put in the time and effort to study and understand the technical side of investing and develop the emotional control to avoid panic when markets crash, and finally, you act with patience and intelligence, then active investing has the potential to generate far greater returns compared to passive investing. There's no two ways about it. Thank you for watching, and if you're someone who's interested in becoming a smarter investor, then I'm here to help you every step of the way. That's it for now. I'll see you guys in the next video.